The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 7th Terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and folks, I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool that I call happiness is a byproduct. Now, the Constitution of the United States says that every person is entitled to life, liberty, and the pursuit of happiness. And there's an old adage that states we are born to be happy. Now, for some people, the primary goal of life seems to be the attainment of happiness. There must be an innate knowing that our purpose in life is just simply to be happy, because we seek happiness with all of our hearts, folks. Now, sadly, most seek happiness outside of ourselves, much like the search for the Holy Grail. You know, if you observe others, you typically will find that the happiest people seem to be those who are working to give happiness to others. Happiness is not found by seeking it. It is a byproduct of trying to help others out there. Question: what did you do yesterday to help others in your life? In fact, more importantly, what is it that you're doing today, right here, right now? What is it that you like to do? What brings you the greatest joys and the greatest fulfillments in life? Do you have those things written down? Because you should. Write those down on a piece of paper. If these are the things that fill your day, if these are the things that take up your time, guess what? You'll probably be happy. There is nothing that I would rather be doing than doing this. I'm grateful I get to do this for 2 hours. I get to do the thing that makes me the most happiest for 2 hours. You should be doing the same types of things in your life. Write those down on a piece of paper. If you need more happiness in life, then push your happy button. That's all you've got to do. It's those items you just wrote down on a piece of paper, and maybe they just came into your mind, folks. Those are the things that are your happiness button. Happiness boils down to simply becoming the person you want to become. It's not about what you have. It's about who you are, folks. So let's go take a look at these markets out here. You know, nothing for me like kicking off a show with the Guess Who as the music intro. One of my favorite bands out there, and it is Terrific Thursday. That means the PGA Tour, kicking off their weekend session here. In fact, they're down in Florida, down at Doral Country Club, which is a great country club. It's one of the few courses in Florida where you can hit the ball pretty much near the green in the rough, and you can lose the ball there. If you haven't had a chance to play the Blue Monster, I suggest put that on your bucket list as well. And, of course, it's another beauty about being down in Miami, folks, is that not too far down the street you've got Joe's Stone Crab. And if you haven't had Stone Crab, you got to put that on your bucket list as well. And maybe you're not a crab person, so then just go a little further down the street to La Paria or Los Ranchos and get one of the best skirt steaks that you will ever have in your life. In any event, I know you didn't want to talk about food this morning, but it is breakfast time, and let's go take a look at these markets here right now. Futures-wise, we got the Dow futures up about 26 points, trading out at 14,290. ES Mini up at the 1542 level, up about 3 points. NASDAQ futures up just a little over 5, out at 2793. Russell 2000 futures up a bit. King Dollar getting smoked this morning. Well, we'll go take a look at it and see what's really behind that. Well, what's behind that is the Queen. The Queen is up about 100 ticks this morning. King Dollar back about 48 or so. We'll take a look at the currency market. You've got gold trading up $7 out at 1582. You've got silver trading out just over $29. That's up 22 cents. That's up about 0.7% this morning. Light sweet crude moving a bit higher this morning. It's up 0.8%. Trade deficit in oil rose more than what was forecast. In fact, we also had jobless claims numbers were out. They fell to a 6-month low. The ECB, as well as the Bank of England, left their rates unchanged. No real surprise out there. or shouldn't have been a surprise in the marketplace. Our call number is 877-927-6648. Before we peek in on the ES Mini, in fact, we'll go take a look at the trade update from yesterday. We got the DAX is up 3 points, the FTSE up about 17 right now. Over in Asia last night, the Hang Seng took a little bit of a breather. It was down 6 points, so really a flat market out there. You had the Shanghai off 24 points. That was down about 1%. And the Nikkei continuing its move higher, up 35 points last night. Yesterday, if you were listening in on the show, I indicated on the radio, I went ahead and took a short position in the ES Mini. Now, the short position I was taking, based on the 30-minute chart that I use, there's a trading system that I taught folks, quite a few folks. I wish for those of you that didn't attend, boy, in any event, so I'll go beyond. We'll skip over that for the moment. But there's a trading strategy that I shared with folks, and in fact, as several subscribers have said in emails to me, and I love those emails. Keep those coming, folks. As some of those subscribers have said, I really gave away the store 2 weeks ago this past Wednesday. And it's a trading system that you have to be very, very there. The rules, it's a discipline. It's a very disciplined trading strategy. You wait for things to set up. In the my newsletter yesterday morning, I was able to identify exactly what the setup was. So folks didn't really need me to enter the trade. They didn't really need me to send out the text alert. They didn't need me to actually send out the email alert that we were entering the trade. And we got in at 15:43.50. That was at the 10 o'clock session. Right after the 10 o'clock session, I just simply hit the sell button on my system here because I knew what the trade setup was, and then was easy to put in a stop. And we had a 5-point trailing stop inside this trade. The equity I mentioned also on the show here, there's kind of like a silent hidden support area, support or resistance right around that 1539 level out there, and we can see that really is where price really did find some resistance, maybe a tad lower. In fact, at 12:30 yesterday, price got down to 1537.25. That was a low. Coming into that 12:37, that meant our adjusted trailing stop moved up to the 1542.75. We ended up with a 0.75, 3/4 of a point profit in that trade. All you had to do was just follow the specific rules. Now, here's the cool thing, folks. Excuse me. Typically every other Wednesday, I do a workshop for all of my clients, and it's an education-based workshop, different than what it is at. Not that there's not a lot of education I don't provide here on the radio show, but a totally different form of really educating my clients. Because look, my role is to, in fact, for each of you out there, it's really you're underneath my care, guidance, and protection here for the next couple of hours. And I take that role seriously out here. And this trading strategy, just simply going back to July, most folks out there, like yourself, learning something new. I don't know if you've ever done this, but for me, one of the things that I have the least amount of, it seems like, is time. So when it comes time to actually doing something, I can usually find all the reasons why I shouldn't do it. I don't know if you've ever had that experience in life. And sometimes it doesn't even matter how much benefit you might receive. Some of us that are out there maybe struggling, want to shed a few pounds or what have you, we know what to do. But usually it comes down to, I don't have enough time. So I don't know if you've ever done that, but I certainly have. And I've learned that by having that philosophy on life, I end up missing out, or I used to think that. I don't do it any longer, but I used to miss out on huge opportunities. There's that saying out there, you're always looking for something, and then maybe there's a belief system that maybe you've heard the story, and it's God throwing you a life jacket or a rowboat or whatever kind of boat out there. And the reality is there's so many opportunities always in front of us, and that's really what it is that I was so excited about that I shared a couple of Wednesdays ago. It's a trading system that you really want to make sure that you understand, because maybe you don't trade the ES Mini because you can put all the reasons why you don't. Right? It's just like not having enough time. I don't want to learn how to do that. Maybe you think there's too much risk. There's no, trading risk is the easiest thing to control. The easiest thing in trading is controlling risk. And when you're trading something that trades 23.5 hours, it's actually much easier to control risk than trading in the equity markets place out there. So I know all the reasons why, because I used to have those reasons as well. But when you're looking for a life raft, and since July 12th, folks, this trading strategy is produced. I know it sounds like it's too good to be true, but it's real. Everything's documented. You can go back and take a look at it yourself. You can replay it on most trading systems out there so that you can get so that you can master this skill out here. I can't find any other skill that you want to master, but too good to be true. It's already up over 100%. Can you believe that? Since July 12th out there. As far as the number of trades that's set up, this is where you've got to be patient, because the total number of trades, let me see here. I might be able to pull this up on a different screen. I'm going to count them up here real quickly here. The total number of trades since July 12th has been 30. So only 30 trade setups out there, and this is something that you want to take a look at. So anyways, that's an update to the trade yesterday. Got in at 1543.50, shorted it out at 1542.75 for a little bit of a profit. On these trades here, you never know how long they're going to run. All you want to do is make sure that you're using money management. Now, if we go take a look, in fact, we'll be going to break maybe in about a minute or so. And one of the things that I was doing was spend a little bit of time with Bud Rolfs yesterday and a little bit of time over the weekend. For those of you that are longtime listeners, you know Bud, and he is, he's the godfather of primary trading ranges out there. And so just simply was looking at some charts with him, and I'm going to go ahead and share with you in the next segment, and maybe, for a couple of the other segments, what it is that we took a look at and taking a look at the NASDAQ composite. But as we come back here, we're going to take a look at the daily chart here, take a look at the daily chart on the ES Mini. What we have here is you've got a setup, a 1.618 butterfly sell pattern coming off of the September 14th high. That was at 1468, all the way down to the low on November 16th. That was at 1340.25. If we take a look at what that price point projection is, 1546.95. Let's just simply call it 1547, because you can't get to 1546.95. So far, yesterday, what the high was 1544.75, so we're about, 2 points away. Today's intraday high, 1544.25 as well. 877-927-6648. Hope you're having a great Thursday. I know I am, being here with you. Thanks so much for being here, folks. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow futures up about 26 right now, and if you are listening on the radio or your mobile device at tfnn.mobi, remember you can always catch the archive of this show on Channel 9, or better yet, go over to the homepage at tfnn.com. Over on the right-hand side, you will see a little button. It's got 3 smartphones. Click on that, and this show will stream live to you. That way you can take a look at all the charts out there. We're going to start off by taking a look at the NASDAQ composite. We're going to start off taking a look at the long-term, the monthly chart out here. Now, in the monthly chart, this here right now on the screen's going back to 1994. Of course, what you can see is that real parabolic move up to the highs in 2000 as it got up to the 51.32 level. Right now, the NASDAQ trading out at 32.22 in the marketplace. But the NASDAQ was the first one over the 2007 highs. So to a certain extent, you know, people will say that the NASDAQ is the weakest of all the indices. Of course, the comparison there is simply going back to the all-time highs. However, if you use that as the benchmark 2007, one could actually say that the NASDAQ is leading things up, which is what you typically want to see inside a bull market, isn't it? Something to think about. Even on the bottom of the screen there, you're taking a look at that relative strength, relative weakness indicator. Certainly helps you to understand where it is you want to be looking for buying, where it is you want to be looking for selling. I was going to say crying, but I don't really mean crying out there. Now, let's take a look at the blue lines going across the screen. For those of you that have the ability to draw lines on your charts out here, you could draw these in as well. The primary trading ranges that are established out here, you can really start there about 600 points. Really here on mine at the bottom, we're taking a look at the 1,300 level, so the next level being 1,900 at another 600 points at 2,500, and those are the blue lines going across the screen here. Those are referred to as primary trading ranges out here, and typically, well, they'll act as magnets. They'll act as magnets. You'll see price traveling with inside them. In fact, coming off of the lows back here in the 2003 time frame, when you break through it, usually you'll come back and test it. That's exactly what happened back here in the 2004 time frame. You got to give it a little bit of room on either side here, and you can see these little red dots. Maybe you can't see the actual color, but in the middle there, that's really what's being referred to as a mid-primary trading range, just simply the midpoint, the halfway point, and oftentimes those will act as little reversal areas, or you'll see price traveling with inside. In fact, going back into the 2003, 2004 time frame, we can see as the composite broke out, it tested that midpoint level several times, finally breaks out, comes back for one more test back in the 2006 time frame, goes up to the very top of that range in 2007, in February 2007, makes a break, and gets right up into the midpoint there of the, let's see, it's about the 2,700, actually gets up to a high of 2860. Probably it was about 28.50 was the actual, at 28.40, 28.50 was probably the midpoint out there. Comes back, tested, came back inside this primary. And you want to understand where price is traveling with inside these ranges. Now, what I always talk to you about, or what I always teach you about, and maybe some of you already have picked up on this as you take a look at it, if we're just simply to forget about the primary trading ranges that are out there, just for those of you that are certainly longtime listeners of TFNN, or that used to follow Bud, now you've got the primary trading range boundaries that you can go ahead and put on your chart here. But if you knew nothing about that, because I'm not going to teach you that in 2 or 3 minutes time out here, that's not really my intention. But if you just simply, if I just say, hey, what about that Walmart stock? What was it about the Walmart stock that maybe the composite has in common with it? Well, you'd say, oh, Steve, that's pretty easy. It's been traveling in the sideways consolidation trading range. And what you've always taught us about sideways consolidated trading ranges is just simply when it busts out of there, the move that you're going to make is basically the same move from top to bottom that was made before. So we can certainly see the sideways trading range. We can say that sideways trading range was really established by the highs in 2007, October 31st, 2007. You can see that. You can see how it held as a resistance area back in May of 2011. And it wasn't until you actually broke through there, and you broke through there in February 2012, so a year ago, a little over a year ago is when you broke through there, that was the breakout of that consolidation range. So one of the easy tools for a price projection, you bulls will most certainly like this, and I think even the bears, because, yes, there will be some type of pullback in the marketplace. I don't know when that's going to happen just yet, but there's some divergence out here. But let me just use this one tool. Those you're familiar with me using this, I'm just simply going to go ahead and measure in a little square box from the high to the low of the consolidation. Now that you've broken out of that range, let's go ahead and just take that box and move it up here. Take a look at where that moves it to. That box takes you right into the lows here, folks, of 2000 inside the NASDAQ composite out there, because it has broken out of that sideways consolidated trading range. Is it going to do it overnight? No. But what is of interesting note, most certainly, is the composite is in that next level of primary trading range boundary, really setting up a move at some point in time here up into the 3,700 area, trading out right now at 32.22. 877-927-6640. Be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 36 points, trading out at 14,332. The composite up 5 points, trading out at 32.27. S&P's up 3. Russell 2000 up 14 cents. Google up another $4 this morning. Apple down 2, trading out at 423 and a little bit of change. Microsoft off 2 ticks. Intel up 8. Cisco up 7 pennies. Leading the charge or to the upside other than Google. Google's in first place. Drafting is Navistar International up $3.90. That's up 15%. What is going on with this equity here? We'll take a look at that stock chart in a moment. Let's see if they were out with revenues. They sure were. Q1 net sales and revenues $2.6 billion versus $3 billion last year. Interesting. They had a net loss of $1.53 versus $2.19 last year. Maybe they've given a good guidance out here. But there is a celebration going on, up 15%. Mellonix Technologies, MLNX, up 6% this morning. That's up $3 and change. NQ Mobile, NQ is a ticker symbol. They're up 19% this morning. Smithfield Foods, SFD, they've got some bacon brewing here. I can smell that bacon. It's up 6% here, about $1.40. Green Mountain Coffee Roasters, nothing like having some bacon and coffee in the morning. Of course, I can't really count the number of times on my hands that I've ever had bacon or coffee together in the morning, although it's probably a good combination. There's probably somebody who's got a bacon coffee candy out there. I guess some people say everything goes good with bacon. Well, Green Mountain Coffee Roasters up 3% this morning, up $1.48. To the downside, PetSmart, PETM, getting a kibosh this morning, down 7% off, about $5. It got Meredith Corp MDP is off 7%. Apple down a couple bucks. As we mentioned, Netflix down 2% off, about $4 this morning. Ross Stores off 3%. Kane Anderson, KYN off 5%. Solar City, SCTY off 8%. And again, our call number is 877-927-6648. I'm going to share with you a currency chart that it's a pattern that I picked up on a while ago. And if you're watching on Tiger TV, what you are seeing is you're seeing some, they're really kind of some, light pink shaded boxes. Going back, this chart here, it goes back a little bit further than this. In fact, I can pull it off to the side here. So I'm going to go back into the 2002 time frame. And these boxes here that I have colored, other than this blue box, what they all represent is the Euro-US dollar. We're looking at the Euro-US dollar currency pair, and we're looking at a weekly chart. Now, it's really a cool pattern to understand, especially if you're a currency trader and you trade this currency pair. Yeah, this is a must. Now, because we know that currencies simply impact what goes on across the world, that makes it another must to just simply understand this chart. What you're going to see here, these boxes, these areas that I have shaded in, they're all towards the end of the year or beginning of the following year. So in this case here, I'm going back to 2002. This is really shaded in from the December time frame to the February 8th, 2002 time frame out here. So in that stretch of period, for some reason, each of these boxes, so even this blue box out here, now this is the end of 2002, the beginning of 2003, and it's the only period of time where what it is I'm going to share with you didn't work. So if we take a look here at 2004, this is from the end of December through about the early part of March out here. And with each of these boxes, they've also, so it's very clear what these boxes identify, they're always the end and beginning of a current calendar year. And what's interesting about the euro, as you will see, in all cases, with the exception of this one period of time back here in 2003, they've always identified a significant change in trend in the marketplace for the euro-US dollar. So how important would that be to you in your trading? So now let's come all the way. Now this is kind of cool. Let's come all the way fast forward to where we're at today. We're looking at the weekly chart. And if you knew that ahead of time, how could you have used this in your trading out here? If we take a look at, we're looking at a 0.786 Gartley sell pattern that came in, sorry about that, came in off of the October 28th high inside the euro. That was when it was up at about 141, what was the high? Was 142.464 out there. So made a real nice Gartley sell pattern as you're dealing with that same time period, the end of December through the early part of the month. In fact, in this case here, it was really the early part of February. Made a bearish candlestick right here on the weekly chart, the week of February the 8th out there. And I suspect what we've got is we will see lower price in the euro-US dollar currency pair, just simply based on past experience. Now, we can take a look at measuring the size of a move. We could take a look at the size of the move here coming off of the 2012 time period. But because we've got this Gartley sell pattern that has worked, that is giving us the signals. In fact, if you take a look at where the euro's actually traveled down to on a weekly basis, you would come back and take a look at the lows of January 4th. You'd see that is a swing point. Swing point low, 1299.63. What did the euro actually do last week? Got down to a little bit lower low, closed just slightly above that swing point low from January 4th out there. So it makes a 100% move of a move. So to see a little bit of a bounce here, that would just simply be normal. Now, when you take a look at a Gartley pattern, if you go from in this case here, it's a Gartley sell pattern. So we're going to go from the July 27 swing point low. In the euro, that's 124.11, all the way up to the high that marked that 0.786 retracement. What we will see out here is we'll see that the euro also on the weekly basis made it down just below that 0.382 level. Today, it's having a nice little rally here today. Up as far as, let me move over to a different start here. Up 112 ticks right now, pips I should say. So as we take a look at the euro here, so it's made it to a normal area where you're supposed to let folks off. It's made it 100% move of a little swing point out here. But what this really sets up, either a bounce to create the B to C leg of an A to B equals CD down. That would be certainly normal. And as well, it really sets up moving back and really testing the lows here at a minimum, testing the lows of November 16, 2012. That's kind of interesting. Testing the lows of November 16, 2012 out there, right around the 126,785. So for all of you currency traders, you just got a little Stevie gift out here. Go check it out on your charts. It's a really amazing pattern to understand. I can't tell you why it works like that. I just know that it does, and it's something that you should pay attention to. I suggest that you pay attention to it. Let's go take a look. So we've just been looking in here. Look, since we have just been looking at the king, let's go look at the queen. See what. I'm sorry, I got that reverse. Since we were looking at the queen, let's go peek in on the king out here. King still wants to move up, make some higher price. Of course, yesterday he had that breakout session, that little rising 3-candle session as it got over the close from March 1st out there. That close was 82.58. Having a pullback here because of the move in the euro. I think probably some of that spurred in by Super Mario Draghi out there. I don't know what his comments were, but I don't really need to know his comments. Just simply need to be paying attention attention to what the price charts are telling us. We can go peeking on the daily chart of the euro maybe a little bit later or during the next show out here during the Money Masters show. But the U.S. dollar index, moving higher. Look, it's in the overbought territory. So it's got to work that condition off. Right now, it seems to me like that's all that it really is doing out there. Wants to run the higher price, at least wants to move up into about the 83.10, maybe all the way up to the high here on August 2nd, which is 83.61. It will run into some pretty decent resistance, or should, at least Fibonacci resistance, both an expansion of a set of swing points and a retracement right around that 83 and change mark out there. That's on the U.S. dollar index. Let's go see what the pullback here in the dollar is doing to the gold and silver marketplace. Right now, doing absolutely nothing. Now, what I haven't done, and maybe somebody ought to do this, I know I'm going to spend some time doing it, but, gold and silver, this is an unusual pattern here. I don't think you see it that often, where it is in a very tight wound trading range with very small bodied candles out here. So is this thing just simply building some cause to move to lower price? That's one possibility. No question that is a possibility. But I'm going to go back, take a look at the chart, see if I can see any other patterns like this. We're talking about now day 2, 4, day 6 in a row of nothing but just a very tight range sideways move. Doesn't really matter what the U.S. dollar index is doing. In fact, the last several days, we saw the U.S. dollar index break out. We didn't see gold pull back at all. Something to think about. Let's go take a look at silver, hi-ho silver, see what it is doing, and what we'll see here is really the same pattern with the exception of yesterday. As the king was moving higher, silver also moving higher as well. We've got that 0.786 Gartley buy pattern, the swing point, which is the low of February the 20th out there at 22.25. That was tested. That swing point at 75,000 contracts, that was tested with 47,000 contracts. Certainly not enough to bust it down. So that is on silver. Let's go take a look in at light sweet crude. Moving up a bit today. Let's see, right now trading out at 91.23. I mentioned this TD combo count here that came in yesterday, so there should be some pretty decent support here at the 89.47 level. But you've got a longer-term crossover. I believe this is the 20-day and 50-day moving averages that I've got up on my screen, and this is really setting up a little bit of a bearish pattern. I suspect if crude does continue to move a bit higher, I can see it moving into one of these exponential moving average. I would say likely it says 9. Maybe this is the 9-day moving average. I'll have to go peek in on it. Let's actually try to do it right now. Let me see what the actual, it's the 9. Okay, so it is the 9-day. The blue one is the 9-day, and the black one's that 200-day. So I suspect that 9-day moving average, which it's trading under, should act as an area of resistance out here. That price is about 91.70 right now. You've got light sweet crude out at 91.25. Still looks like it wants some lower price out there. My clients and I have been short on this trade. We took profits in it as it got down to the 0.618 level, so we took half of our profits off the table, and we just simply put in a tight stop on the rest of the trade, and that was using the SCO, the leveraged ETF out there. If we go take a look at bonds, let's go see what bonds are doing. They were pulling back earlier on some light volume here. If we take a look at bonds, looks like they're probably pulling back into the 0.618 level. Let's go see if it's hit that. It most certainly has. So pulled back so far into the 143.25. That is the 618 retracement off of this little double bottom low that was created out here. That double bottom low coming in February the 4th, as well as being tested February 13th and the 14th out there. Looks like this should be an area of support. We'll see if this holds. If bonds don't hold here, you'll see bonds pull back into the 143.02 mark, and if it does that on lighter volume right there, it might actually be setting up a pretty nice trade, a pretty nice short-term trade when it comes to bonds. But you got to take things one day at a time, one trade at a time. Let's go. I'm going to go back actually to the weekly NASDAQ. When we started the show, was looking at the monthly chart on the NASDAQ. Here's the weekly chart. Now, on the monthly chart, I was looking at 600-point primary trading ranges. On the weekly chart, what you've got is you've actually got half of that. So the first primary trading range I'm going to use on this is just going back into the March 2009 low. So that's really where I'm starting with, and you would really start off with 1,300 is your primary trading range on the monthly, and then you've got 1,450. So you can see it's working in 150 point increments versus on the monthly was working in 300-point increments. But you can see the rising price channel. You can see how the NASDAQ is inside this next trading range here, and it wants to go up, and at least on the weekly chart, it wants to go hit the top of this, which is right around the 32.50 level. So far this week, it's gotten up to 32.33. I suspect it wants to just move just a tad higher. Once it gets up there, I expect that it will find some resistance inside. It should find some resistance and probably pull back and then retest at least the midpoint, which is going to be right around the 31.50 level. That's on the NASDAQ composite out there, and that is on the weekly chart. Let's go take a look at some of these stocks here that are popping and dropping in the marketplace. Let's start off with, let's go take a look at PetSmart, PETM. Is the ticker symbol. So let's go see what is going on there. PETM. And this is gapping down this morning, coming against it's down below another area where it had really broken down with some weakness. So let's go pull this back. This is certainly going to be coming into the area which is untested here. It's got an untested gap. This is PetSmart, PETM. And what I'm looking at is May 23rd, 2012. That was a little sign of strength that this equity had in it, going back that far. Gaps up with 7.5 million shares. The low there, 59.80. We'll just draw a line across the screen here. That is the first area where this is going to at least go test. We'll see if it can find its legs there. Now, volume-wise so far today, in just 18 minutes of trading, so far 2 million shares. So 2 million shares in 18 minutes of trading, taking out the most recent swing point that only had 1.5 million shares. That was February 25th. We saw some institutional selling on this, some unloading, wide price spread with some accelerated volume on January 28th. That went from a high of 68.23, and quite frankly, it was higher the night before. The night before actually closing at $70, $69.99 to be exact. And made a low on that trading session of January 28 down at 62.63. You had some institutional selling there. This candle right here, you didn't really know what you had. This was the October 4th candle, big high volume area, but doesn't make you still have that kind of volume. Looks like those folks are moving out some shares. Next stop down on PetSmart is certainly going to be the 59.80 level. 877-927-6640. Be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 42 points right now, and for those of you that are anywhere near the San Mateo, California area, March 16th, Saturday, March 16th, that's not this Saturday, but it is next Saturday from 8:30 to 12 noon. You want to make sure that you come visit Tom O'Brien and Daryl Martin. They're going to be hosting a workshop called Dynamic Trading Strategies. Going to be a great educational session, as well as they're giving you prizes, folks. 30 prizes worth over $2,500 out there. What a great way to spend your day. So all the details on the homepage at TFNN.com. And for those of you up in the Northeast, well, really from anywhere around the world, anywhere around the country, Basil Chapman is going to be conducting a Master Trader course on Saturday, March the 9th out at Babson College. All the details also on the homepage of TFNN.com. As we take a look at some of these stocks here that are popping and dropping, we got Navistar, NAV is the ticker symbol, up nicely this morning, taking out a B point. So now we've got a confirmed A to B equals CD up, gapping up, doing it so far this morning, only 25 minutes in trading. 3.5 million shares taking out the B point that has 1.7 million shares here. Let's go take a look at the longer run on this. We'll use as our A point. In fact, we'll just out of curiosity, just want to see what's going on here relative strength-wise. So let's take a look at this equity. We're going to take as our A point the low from October 25th, 2012, 1817. There's your A point. Your B point we're going to use is the, let's see, was this, the actual high did come in on February 15th, 2745. Pulls back, not much of a pullback. Let's actually go measure what that retracement was. We'll go from our A point to our B point, and what we're going to see is a 0.382 retracement, gapping up. This equity here wants to move beyond the 1-to-1 A to B equals CD is 32.49. Now let's take a look at this high volume bar out here that this is trading above. So it's trading above this area. If this clears, I'm going to draw a line across the screen here. If this clears this bar right here, this will truly be a breakout. Now, it's already a breakout here, but we'll see if it runs into any kind of overhead turbulence. That would be taking a look at a small little area of resistance that is built up, going back really to the swing point of June 15th out there. That high is 31.07. But it looks like this little rocket ship is moving off to the races here. If we take a look at just simply normal retracement off of its last leg down, that would be coming off of the highs from February the 3rd, 2012. That was at the 48.18 level, all the way down to your A point of the A to B equals CD up. You can see here right now this morning moving into that 0.382 level, but it wants to head to $36.17. That is on Navistar out there. You don't need to chase it here, but a nice A to B equals CD pattern that is underway there. We take a look at, let's see, what else is popping out here. We got Hot Topic. Hot Topic. Wonder if that's like, it's not Hot Pockets, though. Or isn't that's a frozen food thing, right? Hot Topic. Let me see. What are these guys? They're going private. So that's what's so the topic there is they're pretty darn. Let's go to take a look at Smithfield Ham. SFD is the ticker symbol. SFD. It's really Smithfield Foods, but let's take a look at that wide price spread. What the heck is going on out there? Did we look at that? Was that a revenue thing? Let's see here. What did they do? Just out with earnings. I don't know if I covered it, but look at the wide price spread on Smithfield Foods out here. This is heading all the way back. Boy, I'm going to pull this back. I tell you what, we'll take a look at this during the next show, the Money Masters show. If you're off to start your day, thanks so much for joining us. Have a great Thursday out there, and I will look forward to seeing you in the morning. And remember this, folks. Always remember this. You have an amazing power within yourself, and that power is so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, and most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day, folks. Look forward to speaking to you soon. Take care.
Let me tell you something, folks. I had people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.